Podcast is now starting. All attendees are in listen-only mode.
All right, welcome everyone. Before we start, just want to make sure that you can see my screen and hear me. Thank you, Steve. All right, let's go ahead and get going. Welcome everyone to our next weekly StockWaves webinar. The topic for this week to start off, we thought we would take a look at railroads. So I have pulled up on my screen right now the TRAN chart, the Dow Jones Transportation Index. And we will also go through some of the larger cap stocks that make up most of the railroad companies. So basically, we have a very similar count on the transport index here as what we're looking at in the majority of individual stocks across the market. Basically, either the bounce off of the December low completed a B wave, or a fifth wave as an extension of the larger impulse off the 2016 low, and we're set up for a C wave down, or just the rest of a primary wave 4 correction since that high that was struck in April. So that applies here as well, with the bounce off of the December low, ideally counting as a B wave, and price now starting wave C. I have noted that because other charts may be filling out an ABC pattern to the downside, we may end up switching the count to a W, X, and Y, or rather than a nice 5-wave C wave to the downside, it'll fill out as an ABC pattern as well. But the overall target should be roughly the same in either case.
I think especially since there are a lot of stocks that can count as that alt fifth wave of as an truncated extension of primary wave 3, then that with those stocks looking for a new ABC as the primary 4 off of the more recent March, April, May highs whenever they topped recently, that either looking for that WXY or some other more complex corrective type looking pattern, I think is prudent.
Right. So for now, we'll watch possible C wave down on the transportation index, but again, may switch to a Y wave. So overall, if we're going to look for just a measured move, that would put us down at the 82.90 level here. So not too far off from the low that was hit in December, but we do have better confluence of higher degree fibs deeper down near 7,400. There is this 764 extension here. Bring that to the front. It's not letting me select it. Anyway, there's a 764 extension here as part of the higher degree fibs based on the 1-2 that you see here in blue. So that may end up where the overall correction is primary wave 4 targets before it attempts that bottom. So we could be filling out the initial wave 1 of C, which ideally still needs maybe another 4th and 5th before completing. Or if we start to fill out more of an ABC pattern to the downside, that would be evidence to suggest switching to the WX and Y count. But expectation in either case is to head down at least towards that 86.90 level, if not all the way down to 7,400. So let's go ahead and look at some of those individual charts. Starting with UNP. I'll zoom out here actually. UNP off of the 2009 low can actually count as a completed diagonal, or a diagonal completing at the April high here. Now, obviously, we're still very close to that high and don't have a lot of evidence off of the high to start confirming this possible expectation, but it's at least something to watch out for, where this could be starting a much larger correction to the downside than just a primary wave 4, actually a degree higher as a cycle degree 4th wave. Zooming out here with the cycle 1-2 back in 1980 and then 1982. But we'll take it one step at a time and kind of look for a similar move down to start with, as we're looking for on other charts, and that should at least take us back down below 100 again, ideally. So initial indications that a top has been struck here is going to be a break below the March low, and that should yield at least a move back to the December low. And this is another chart where when you look at the size of the correction we got into the December low, it's just not sizable to the, or proportional to the point where it looks like a primary fourth wave. It looks like it was part of the impulse up, in this case is a C wave, off of this October 2016 low.
Especially on this one, because if you're going to apply a similar impulsive count to the market off of 2009 and count that same intermediate degree 4, but of the primary 3 off somewhere in 2010, then it was so much, at least in the market, the move down into December 2018 was somewhat proportionate size-wise to the 2015 correction into January, February 2016 lows. But this was so much more mild that it far more argues in favor of it just completing whatever that move is off of the 2016 low and needing a pretty substantial retrace.
Next up, let's look at CP. I also have a larger diagonal on this chart, but starting from a different point, the 2009 low marking the cycle degree wave 2 bottom. Here, the move up since 2016 can actually be counted as a B wave, and we're just only slightly above the prior high that was hit in 2014. It is possible to get another B and C here, but I could easily be persuaded that the B, A, B, and now the C wave here has topped already to finish off that B wave, and it's ready to drop again in a possible C wave. So, at the very least, we should be heading down to a 382 to 618 retrace of this move up since the December 2018 low. And that would put us at 204 to 189, and very likely we can continue much deeper than that. The CSX is another larger cap name. Bigger diagonal pattern applies here. Also slightly different as far as where those labels are placed. In this case, the cycle degree wave 2 back in 2000. And filling out this cycle wave 3, kind of similar to UNP, potentially topping at the recent high in April. So that sets up plenty of downside in a possible cycle degree wave 4, which can take you back based on the fibs potentially as low as 2350. Usually within. Sorry, go ahead.
What I was just going to say, what I really like on a lot of these charts that we have, both here in the railroads and other things, maybe it's Apple or other things that we've talked about, that look like they're due for a cycle degree wave 4, the primary degree A wave of that seems to line up very well with the proportional expectations that we see from most of the market for the primary wave 4 that we still are looking for.
Mm-hmm. So at least near term, we can expect similar from that A wave down.
Exactly.
Next up, CNI. The move up here can still count as impulsive off of the 2016 low. I have it as a cycle degree 5th wave. Also, these charts seem to all have kind of different looking counts overall, but played pretty good Fibonacci pinball on the way up. We had a wave 3 of 3 kind of in between the 100 and the 1236. The wave 5 of 3 hit that 1382, pulled back to the 764 in the 4th, but it did come shy of a normal 1764 extension on the 5th. But that doesn't mean that it can't be topping sooner or shy of that target here as the 5th wave and heading down more immediately, especially with the way that the rest of the market seems to be positioned. So if we start to take out further support, starting with the March low here at 86, then it opens the door to this top in place, and Zooming out here, potentially a very large cycle degree 5 waves up. Moving on to NSC, which aligns a little bit better with CSX, I would say. Off of the 2016 low, nice impulse count into the more recent high. Similar situation here where the dip down into the December low proportionally fits much better as a 4th wave within the impulse off the 2016 low rather than any sort of higher degree corrective move. And the more recent high potentially completing that 5th right into the next fib resistance there. So can easily be setting up a cycle degree 4th wave pullback as well, which can take us below 100 on this chart also. Further indications and confirmation of a top in place on this chart is going to be, well, we're kind of testing, haven't made a sustained break yet, but testing that prior made low, so taking that out is the first step. And then the prior March low here, which is about where the 200-day moving average is currently, would be the next hurdle to cross as far as setting up that cycle degree 4th wave to the downside. We'll take a look at KSU also. KSU can work as a similar B wave in comparison to, what was it, CP or CNI, I think. This being an A wave down into the January 2016 low, and what counts best is a 3-wave structure since then as the possible B wave. So this can be set up for a C wave back down to finish off this primary wave 4, at least back to where the A wave bottomed at, which would be around 60, and potentially a little bit lower than that, about $10 lower to the 50 level, where this 2382 extension fib is.
I'd probably up it by 1 degree to make it cycle, if that entire move off 2008.
Yeah, I could move it up. But this is the higher degree count that I have.
I like that.
So a nice, sizable drop can easily be seen here as well. Obviously, taking out the December low is going to be major confirmation of that C wave underway. Closer support on the smaller time frames. To start with, we have the May low here as well, then the 200-day moving average at around 110, and then this prior February low as levels 2